This is Matt Shaw with a Bull Bearings outlook on the Dow Jones. Now, a few pieces of data out. It's 3:30 a.m. precisely on November the 21st, 2012. It's 3:30 a.m. UK time. Now, we've just had some fundamental data out an hour ago. It's showing that stocks are advancing due to US housing, helping to boost export outlook. Asia stocks are gaining, with the regional benchmark index setting for its highest close in 2 weeks. US home building rose to a 4-year high, showing signs that obviously the US, the world's biggest economy, not for much longer. It seems to be recovering and thus boosting the outlook for obviously the region's exporters and whatnot. With now Japan being the second largest buyer of US debt behind the US themselves in first place. I think they'll have a vested interest in this, buying all those Treasury T-bills. They're sort of factored into the game now with the US. So we've got Samsung Electronics up, MSCI Asia Pacific Index all up, Japan's exports, they've got the Nikkei 225 up at the minute. The nation's exports fell though for a fourth month, increasing pressure on the central bank, obviously out there to add stimulus, as it seems to be they're moving closer towards a recession, which it seems to be looking like. I think now the elections in Japan are looming into December. We know they're expected to, the opposition leaders expected to get in, Shinzo Abe. And we know he's a great advocate of more aggressive monetary easing. However, looking right now, obviously the yen is down slightly right now, but with the Fed chairman Bernanke said that they're close to an agreement with coming up for a reduction in long-term federal budget deficits. This could remove an impediment to growth, while failure to avoid the so-called fiscal cliff would pose a substantial threat to the recovery. That's an absolute quote there from Bloomberg. However, I'm more interested on how we're looking technically here over the coming few days. Japan's exports are not good. Things are not looking great. However, you've got Bernanke coming up to say everything's going to be a great year. For me, it's a load of codswallop. I think we will rally into the year end. I don't think we've got a great rally ahead. I think going by today, what I've witnessed since the death cross year with the 20-day moving down through the 50-day moving average, the exponential moving average, we really want to see the 20-day moving average cross down below the 12.9 level here, the 200-day moving average. As soon as we see that, I'm going short this market at 12.8, 12.9. I'm prepared to buy back the market from 12.5 here. Any advance, any hold, all closing levels above 12.8, I'm willing to hold on to my buy. I bought the market. This is an absolute signal going out to my members last night actually. I'll just get this up slightly. Excuse me. Not very late this evening. Very late indeed. This is an alert that was sent out to clients. I'm just going to move the screen up here. So this is financial trading doc. And everything is shown in here. Saying the place to trade, basically. So buy Wall Street December 12.730. Target is 12.820. Stop loss 12.650. So we'll be coming out of that position very soon. But that was out on Monday. All right. So we're now the early hours of Wednesday morning. We're looking to come out of that trade later tonight if the market can have one or two more. We're going to be closed Thursday for Thanksgiving. I don't think we're going to rally much more beyond there. Today, I'm going to bring this down for you to check out here. again move the screen. The Dow today, it didn't want to get up above 12.8. On each attempt, 12.8 was met with big resistance, 12.7 we touched up from, and then 12.8 the market just about closed at 12.788. It's all about this 12.8 line. However, at the same time, the market seems to be hanging on to it. It doesn't seem to want to break it, but it doesn't seem to want to leave it behind either. So this is what we've got to bear in mind. I'm long just ever so slightly, but I'm also looking to get out of the trade and turn bearish pretty soon. My target is a mere 12.850. My target is not 12.9 because I don't think if we're ready to sell off we won't reach 12.9. So I'm happy just to give up half of this potential rally to 12.9, 12.950. So 12.8. We've closed here at 12.788, as you can see here, the small red line right here. As long as we can get above 12.8 into Thursday, Friday, the 22nd, 23rd of November, and into the 26th next week, Monday, then that's fine. Then I think the market could see new highs and a nice Santa rally up to 13,000. However, if the market cannot hold on to these gains and really struggles, then I think we're going to sell off for the rest of the month and into December. And we may see a week or two before Christmas a nice perk back up to current levels. But certainly if we cannot hold and break 12,900 by the 26th, 27th of November, then we're going to sell off, and we're going to sell off quite a lot. Another 400 to 500, 600 points probably, okay? Before we might just rally that back before the end of the year. But I think into February we're going to head towards 9,000. I've said this before. We're heading towards the levels that once were earlier on, back some years ago. Back now in middle 2010, 9,600. This is where I expect the market to be trading, just below 10,000. Here, 9,800. In the next 3 to 4 months, by March 2013. Guys, I'm going to leave it there for now. Any questions, please, by all means, go to financialtrading.co. Check me out, and I will see you very soon indeed. Just remember, the markets are indeed closed come Thanksgiving on Thursday the 22nd of November. Until then, enjoy your trading and take care. Thank you very much.